Is it inflation or just your imagination? Is the economic data even making sense or even useful at this point? Ultimately, what the Fed chairman sees in the economic tea leaves, or the morning oatmeal for that matter, is not within your control. However, protection of your retirement savings is in your control. This should be motivated by knowledge and confidence, not fear. If you think you may be falling behind in your financial goals, see the video description to access the free Inflation Retirement Calculator to make sure that you are on track. Also, please share your experience in the comments. To discuss why gold works, why fiat currencies ultimately fail, and why gold and other scarce assets act as an insurance policy against risk, we will hear from economist, White House advisor, and author Jim Rickards, former congressman and activist Mark Finchem, economist and investor Keith Weiner, and author and economist at George Mason University, Lawrence H. White.
100 years ago, it was different. The term inflation was used to describe what today we call monetary expansion. That is, an increase in the supply of money rather than the result, which is the rising price level. The great virtue of the gold standard was one, that it was apolitical, right? The quantity of money did not depend on a committee meeting and deciding based on their reading of the economic numbers what it should be. And it responded in a way that stabilized its purchasing power. It's nice to have 30-year bonds, 50-year bonds, even 100-year bonds were issued under the gold standard. Nobody issues them under a fiat standard. There's just too much unpredictability.
So when they pass a series of laws, we'll broadly call them illegal tender laws, we were forced to use their debt as if it were money. So think about that. What we call money is a dollar. It says Federal Reserve note on the dollar bill, bill being an old word for credit and note being the word for credit, promissory note. We're using their debt as if it were money. Now, FDR did this in 1933 when he made gold illegal to possess, as in criminal, as in go to prison for possessing gold, the way it is for cocaine today. When he made it illegal for people to possess gold, that forces people to treat the government bond as if that was a conservative risk-free asset. In fact, if you ask any regulated financial professional today, what's the risk-free asset, they'll say the government bond. And so it forces everybody to turn to the government and become a lender to government as if that was a risk-free proposition. And of course, I think it's probably pretty well known that the Federal Reserve, right on their website, says that their stated policy target is 2% debasement per annum. So you're forced to save in this paper, and they have a monetary policy of stealing 2% per year. And so I called it immoral because, first of all, you have no right to force people to use something. And secondly, if you do force them to use something, you have no further right to then try to rob them at 2% per year.
Just a quick interruption to say thank you for supporting our channel. Please like and subscribe if you enjoy this video content. It really does make a difference. Also, a quick mention and shout out to one of our sponsors, Augusta Precious Metals. With over a decade in the industry, Augusta Precious Metals is one of the leading gold investing companies for trust, customer empowerment, and prices. The company provides 401k rollover services to tax-advantaged gold IRAs, as well as a unique gold investing educational webinar and resources for their customers, helping beginning and experienced investors protect their retirement wealth with confidence. Whether you are starting a brand new gold IRA or rolling over an existing account, the company will make this process seamless and stress-free. To find out more about Augusta Precious Metals, see the link in the video description to visit Augusta Precious Metals' official site to receive a free gold investing guide. Also, check out our video review of Augusta Precious Metals by clicking the link in the top right. Now, back to the episode.
I agree every time you said the Fed screwed up. Question is, can we rely on central banks to continuously improve over time? And I don't see a lot of evidence that we can. So after the dot-com bubble, the Fed kept interest rates too low for too long and thereby fueled, maybe not the only cause, but fueled the housing bubble. And then more recently, we've had 9% inflation, which shocked even me. I thought when it got to 5%, they would put their foot on the brakes, but it took a little longer than that before they really started to take it seriously. So some of the things I thought the Fed had learned, they don't seem to have learned in a very robust way. It's not a reliable system.
And really, this is the collision, again, of two ideologies. One that the government owns the money and the other that the people do. Exchange, that's where the whole exchange versus buy thing, we exchange one for another. Now, the fact that this is now worth on the open market, anywhere from 20 to 30 bucks depending upon condition. At the end of the day, I exchanged this for a $20 bill with somebody else. Anything that goes above that, if it's worth $35 today, this didn't gain value. It's still worth $20 to me. What happened is there's $15 in inflation that happened since the time I acquired this, and I should not be taxed on that. Retirement is not a Republican or Democratic issue. That's an every person issue. And if we're not protecting what people are investing in today, whether they are exchanging dollars for gold or exchanging dollars for something else, a house, those things, when people go to retire, if we don't have the right monetary policy in place, the government's taking their retirement.
Gold holds a proven, time-tested track record as an economic constant that spans millennia. Why is it important to have an economic constant? What is the main question every person planning their retirement or building a business needs to ask themselves? Are we growing wealth or losing wealth? And how do we measure this? Gold is that tool. With a 5,000-year record that has withstood every economic business cycle, stock market booms and busts, global conflicts, and outlasting every faith-based fiat currency, gold is no one's liability. It builds wealth while preserving it. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, transparency, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring all these investing principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the link in the video description to access the free gold investment guides. An often used criticism for holding gold is the opportunity cost of gaining yields elsewhere, such as bonds or high-quality equities. Monetary Metals is a gold investment company that unlocks the productivity of gold by offering a yield on gold paid in gold. Monetary Metals delivers interest on gold through the company's gold fixed income investments, which aim to provide a fixed return with low risk of loss. This provides investors exposure to gold's unique attributes, plus a real yield that grows your total of gold ounces held. To learn more about Monetary Metals and their innovative investment products, see the link in the video description. If you have $100K of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.